happy 65th anniversary of our independence to all you Nigerians out there and to my humble self. I'm welcoming today to the Market Report edition of the ADBN show, and we are here to highlight some of the gains of Nigerian economy going forward. Although the president has said it is a time for reflection, and he also made mention of his 12 economic achievements in the last 2 years of being president of Nigeria. So today on the Market Report, we are taking a look at Nigeria's 65 economic achievement. Today's occasion is Nigeria's 65th anniversary of independence. The Market Report show is taking a historical review and contemporary highlight of recent development in different aspects of Nigerian economy. Although many have argued that we don't have much to celebrate, as we have record of failure than success in an economic journey of 65 years of independence and still counting. This brings us to the question of what is the level of inflation in the country. How has the poverty been tackled? What is the rate of infrastructural development? As corruption has been eliminated and confidence restored in our public and private sector? And not to forget how the government is dealing with the issue of hunger, food insecurity, human capital development, health, as well as the well-being of the people. The foregoing will draw our attention to understanding how the country has fared in the last 65 years. This comes from a critical assessment of the spectrum of Nigerian economy, the twin policy economy of the physical and monetary environment that shape and reshape the financial market, manufacturing, ICT, oil and gas, electricity, power, agriculture, trade and transportation, alongside their subsector and unit economy. For instance, we have witnessed ups and downs in the economy that suggest a mixed economic growth, reality that point to a nominal growth lacking in reality of impactful development. However, some sectors in the economy have demonstrated resilience in growth and impact. For instance, the Nigerian financial market industry, since independence, has established a vibrant, robust financial market. The banking, the insurance, the pension recapitalization, and consolidation have all demonstrated the growth of the Nigerian economy. It made Nigerian financial market, especially the stock market, attractive to both local and international investors. Another is the oil and gas sector industry, which many believe has not benefited the majority of Nigerians despite the robust oil and gas resources, granting the liberalization and removal of petroleum subsidy in downstream sector, and improvement of operation of the NNPC and the PIA, that is Petroleum Industrial Act, that has been put in place. This is not to deny the Nigerian black gold, which is the crude oil, are still much very attractive to both local and international investors. In the meantime, insecurity, vandalism of pipeline, and oil theft are still a major challenge in the Nigerian oil and gas sector. But looking forward to creating an enabling environment, underscoring the need to attract both foreign and local investors, and ultimately to benefit the Nigerian people, is the bane of our discussion, talking about Nigerian 65 economic achievement. Joining me right now is Dr. Engineer Wisdom Enang, a oil and gas expert, who will be helping us to understand all these achievements so far. If, for instance, the president has been mentioned of 12 cardinal important achievements that his government have been able to aim and target. And for Dr. Eno, let's ask him whether he's aware of this, and let us have a discussion around it. Doctor, a very good day to have you on the show, sir.
Thank you very much. It's a pleasure.
All right. So happy.
Thank you very much.
Let me just congratulate you first. Happy 65th independent anniversary to you and many other Nigerians that are watching Market Report on ADBN today, sir.
It's a pleasure. Thank you. Same to you. Thank you very much, and other Nigerians as well. Thank you.
All right. So interesting. But let's get the discussion out now. First and foremost, your assessment of the Nigerian economy right from 1960 to date. Let's have your view.
All right. Thank you. I think it's important for us to look at the Nigerian economy from the standpoint of the opportunity that presented itself and how much of that opportunity was converted and how much is still left and what are required to convert the remaining portion that is left. I think one of the best things that did happen to us earlier on in about 1960 was the discovery of oil in Lobori, I think, in Bayelsa. And that in itself became, I think, one of Nigeria's biggest jump starts to industrialization. However, with the benefit of hindsight, it also made us to abandon something that is rather more sustainable, which is agriculture, which I think, in the real sense, we should have grown both side by side. And that being said, we have been able to first and foremost develop our oil and gas sectors, but we've only harnessed 15% of that value chain, like I always say, because the 15% of the value chain is the portion that we understand, which is we're harnessing most of the upstream value chain, which is all of the oil and gas facilities that we have for production, exploration, and production. It is only recently that we have even attempted, through the help of private refineries like the Dangote refinery, to scratch the potentials within the downstream sector. However, the midstream sector has remained largely undeveloped. So that, and then the gas subsectors as well. So that tells us that there have been gains, yes, in the petroleum sector. There have been gains in terms of making sure that we even improve the efficiency of our petroleum income. For example, the removal of fuel subsidy has left us with more money to be able to go into the developmental projects. We've also seen that, by the president putting more aggressive reforms, we have even improved our production targets, and we have even been able to get more production or rig count to get into our fields, and that's a very laudable thing. The tax reforms themselves also mean that we'll have much better tax income for the country, and also we've been able to reduce our debt. But all of those are measures that work, are monetary policies that are meant to still work with improving the efficiency of spend. But for any nation to be rich, the efficiency of spend is just a little part of the equation. The expansion of other opportunities is very paramount. Without, it's just like saying you're earning the same salary, but you're trying to be more efficient. There is a level that you hit rock bottom, that you can't go beyond that. You either need to expand your, you either need to cut some priorities or expand your income sources. So I think it is important. What are some of the missed points that Nigeria has missed? We've missed agriculture, because with the benefit of hindsight, have we not built the rent-seeking thoughts or idea in our agricultural framework? It would have been very clear that there is a strong linkage between the production of gas and the manufacturing of urea fertilizer, which also fit into our agricultural value chain. Would have been very clear. So we would have now, what does that mean? Rather than just building assets and then putting just a very little pipeline network that allows either you flare the gas and take up the production into a tank farm, process that production and then sell it off, or then you just do everything in a localized area. It would have allowed us to intentionally develop our midstream, the Nigerian gas transportation network code that we just brought in the last few years could have been brought earlier, and people could have built gas pipelines just like it's obtained in the US in the entire midstream. Meaning that if we're producing gas here but we don't need it, somebody else could have commingled that gas to where it is processed and needed for agriculture. It would have been a win-win situation for both agriculture and the oil and gas. Now, the second part is our service sectors. For a long time, we had not, and I'm talking between 1960 to 2010, we had not developed the local content part that allows us to harness a lot of that services. So for the most part, we were exporting for a longer period. We were just interested in exporting the labor, exporting everything on, we just care about the crude coming out of the ground. It is in 2010 that we had the Logic Act. We now got the NCDMB, Nigerian Local Content, enforcement people. We got them to now start thinking about how do we domesticate some of these processes? How do we domesticate? How do we build manpower capability? And this now led to us having a huge, breakout of the services sector that now came from the mainstream oil and gas. And today, history would vindicate those that brought that plan, because that is the framework upon which we have been able to smile with these divestments that have happened. Otherwise, we will still be begging experts to come and take over the oil and gas sector.
Very interesting.
Now,
okay, carry on, Doc. Carry on.
Yeah. So another thing that we have not done very well is that we have not developed the extractive sector. The mining sector is largely undeveloped. In fact, it has been left for a few people who just go into, taking it and then selling it, and more so they're doing so, illegally. So there are a number of opportunities that we have not tapped in, and I can't end this without saying that we have not tapped into some of the disruptive sectors. I cannot believe that we have developed so far, and we at a point in this country, we were having counterproductive policies against cryptocurrency, which has even been accepted the world apart. And let me even shock you. A lot of the mining centers for cryptocurrency take the energy from the extractive sector and the petroleum sector. So you can see all of these linkages. We've not tapped into the disruptive sectors like the crypto. Now we're having the AI. Now we're also having the creators economy. Those are aspects that we have not tapped into. We are still dealing with a small size economy and trying to refine efficiency of spend. But there's just so much we can do to achieve that maximum efficiency. Otherwise, we'll hit rock bottom, and we need to see the need to expand to other sources that is now becoming the money end of the day.
Exactly. Very interesting perspective you have given, talking about your intro to the first question that we are talking about, Nigerian economy right from 1960. But having said, Doc, and you already acknowledged that although there have been a little bit of growth, there have been a little bit of achievement, but we have not gotten to that level that will keep us afloat and sustain the economy. But however, going forward into the discussion, we read about President Bola Ahmed's speech this morning, and he highlighted some of the things that he believed that in the last 2 years of his government, things have turned around for good. And first and foremost, his statement that the worst is over as the president's ambition begins to consolidate on his reform. What do you make of that statement that the worst is over, justifying his twin policy of floating the naira and subsidy removal going forward? What do you have to make of that statement, sir?
Well, I think my interpretation of the president's statement is simply that the side effects that we expect from, of course, the policy that was made, because it's like a treatment. It's like saying, so one is undergoing a chemotherapy treatment for cancer. The side effects are tremendously very harsh. And then it's saying, oh, we have gone past the side effect of this economic policy. And all we have to do is to now get into the game. So we've gone from the transient, very stochastic aspects that are very difficult to predict if you're a statistical person. We've now come into a more steady state and very deterministic side of things that is very easy to sort of control the outcomes. So that's what it means. And we can also see that, right, by the way of inflation that has gone down. We've also seen that in the appreciation of foreign portfolio investments that we've had for a while now. We've also seen that in the stability and even appreciation of the naira. So he's saying that the macroeconomic indicators, even within and outside, kind of factors in terms of what people, the government is computing, and even what the external people are computing, like the World Bank and the IMF, that they seem to show that we have gone past the stage where we're not dealing with the side effect. That going forward, we should be building on that gains and continue to improve upon the gains of the policies that for which we have gone past the side effects.
Interesting. And for the president, he quietly highlighted the gain, particularly the gross domestic product growth or economic growth of 4.23, and saying that Nigeria is having the fastest pace in the last 4 years, talking about the economic growth from 3.4 to 4.23. And also highlighting that these are surpassed some of those projections going forward. But what do you make of the GDP as we have it now? Because most Nigerians will still be telling you that even though the GDP is growing, but the reality is quite different. But what do you make of it?
Okay, so let me take this in two parts. And I'm going to give you a little bit of an experience that I think I'm going to drive home the point. So the GDP is a statistical figure, but we need to marry that with the reality. And I'm going to tell you one of the middleman in between the GDP and the reality. Now, let's think about it this way. Nigeria has gone through economic reforms, but there is one key imperative that should help us consolidate on all of these reforms for the benefit of the average Nigerian. And that key ingredient is cooperation from citizens. Now, I'm going to contextualize this further. We went to, let me give you context. In 2000, about 2007, 2006, 2007, there was the thought, or maybe perhaps some sort of thinking that, okay, we could do what Ghana was doing, I think about doing, or either they've done at the time, which was to remove 1 0 from the Nigerian currency. So, but this wasn't public. This was high level, at the government level, thinking if maybe we could remove 1 0, maybe if it was 2,000, maybe 1,480 per dollar, and then we decided to remove 1 0, 148 per dollar. And there was a lot of kickback, not from the government, not from the CBN, but from ordinary people that said, look, this thing used to sell for 2,000. Why can you remove 1 0 and tell me to sell it for 200? You know, that was psychology. But this was the same thing that happened in Ghana. It happened in Ghana, and the Ghanaians cooperated. People, you know, forgive me if maybe I'm taking you back too much into the memory lane. Let's even look at the recent presidency in Ghana. The current president of Ghana did some very good reforms, and the currency appreciated. And there was a publication I saw that unanimously, a lot of the shop owners decided to start dropping their prices to make sure that that reflects on the lives of the ordinary Ghanaians. I'm going to ask you, how many times have you gone into a shop and you saw the prices when things were about $1.8 was about 1.817, and today you even see a higher price when dollar has come down, and you ask yourself, who is to blame? So it's two things. The statistics is there, but I'm telling you that until we take ownership in our distribution and value chain, in our procurement value chain, and decide to make Nigeria work for us, it will still be the same thing. When things go up in Nigeria, it never comes down, just like they say. That's on one part. But that being the case, I would also like us to work with statistics cautiously, because it's all relative. Appreciation in dollars is not the same like appreciation in naira.
Exactly.
There could be a much rapid growth in dollars, in naira, when you compare it, but when you benchmark it across the dollars, year in, year out, you find out that it may not be a growth. But that being said, we want to make naira work for us. We want to make everything work. But I mean, it's good to also, it's a good starting point. On the naira, absolutely yes, the appreciation is very phenomenal. On the dollar, we still have a lot of work to do. But I'm saying that to make it trickle down to the average person is the middle person, which is you and I, taking ownership and making sure these reforms work sincerely.
Let's get to your core area in the Nigerian economy, which is the oil and gas sector. And we have seen a robust production, 1.68 million barrels per day. And the president even acknowledged that there's a rebound, there's a reversal, and there's an increase in our oil production. Doc, let me just ask you, in your own view, is this where we're supposed to be when it comes to oil production, 1.68 million barrels per day? Even though the president is saying this is good to go. But for you, as an energy expert, core in that area, what is your take?
First, thank you very much. Very intelligent question. And the answer is I'm going to give you, the answer in a contextualized format. The answer is no. And why have I said no? It's because the target we are chasing is a target that we have met before. The There was a time when we used to do a 2 point something million barrels easily. So, that being the case, I'm going to contextualize it and let's see where we dropped the ball. But in fairness to the president, from where he picked up from 1.1 million barrels per day, now to 1.6, and sometimes it was even below 1 at some point, it is extraordinarily phenomenal. Because in between where we were, above 2 million barrels, and where we are today are a number of militating factors, which are the factors I would like to talk about and put into context what the president has done to even get us out of the woodworks. The first factor in between that is what we call assets aging. You know, when we talk about things like, you know, all of those petroleum stuff, they are not part of sustainable energy because they deplete over time, simple and short. So asset aging is a very big one. The issue of funding, I keep saying it, that money, investors may have a varied you know, range of portfolios, but in real sense, there are only very few in numbers. So the guy sitting in Saudi Arabia could own an investment, you know, in the maybe in the petroleum sector. He could also own an investment in the AI sector. He could own an investment in the fast-moving goods, consumer goods sector. So that's how it is. So we are not only competing against the oil and gas sectors in different countries, we are competing against the business competitiveness of other sectors. That's what we're doing. So funding is another issue that has brought us here. Then, of course, the fact that as our assets mature, we begin to have divestment considerations. So those are the key factors that have brought us here, and also the we also have the bureaucracy and the costs of the oil and gas sector of producing things in the oil and gas sector. You know, that high cost due to the cost of administration itself, bureaucracy, and all of that. So if you look at that, over time, we were having so many forces militating against us. In 2017, right between 2015 and 2019, sorry, there was an assessment that happened, and it showed, I think it was by the BCG group, and it showed that Nigeria only took in 4% of the total you know, investments in the oil and gas sector that came into sub-Saharan Africa. So that means that all those factors declining cost us a lot of problems and dropped investment. So what did the president do differently? Number of presidential directives of oil and gas reforms came to our rescue. Cut the bureaucracy, helped to improve the physical terms, but more so because we understand that the assets are depleting naturally. There was a command on drill or drop. You either drill, you either go back to your assets or you leave it. And then you know, there wasn't that, you know, laxatives that people would just relax and then do nothing and then use that as a collateral to probably get bank loan. And so that was what it did. And then there was this whole, luckily, the Petroleum Industry Act had been passed, so there was a ground upon which divestments could be undertaken. The local content had come right way before then in 2010 to allow us build capacity. So when we took over, it wasn't a corporation or corporations looking at Nigerian assets versus the assets in Guyana, in Papua New Guinea, in all over the world, the Permian Basin in the US, and looking at which is more you know, competitive for them to put their you know, their investments and make money. It was about the fact that these assets are taken over by Nigerians and they only have Nigerian assets to concentrate on. And so either ways, even if they want to choose the most prolific assets, Nigeria will always win. So that is what helped. And then the president came with a body language to say, let's not make this divestment to be more cumbersome than necessary. Let's give all the enablers, get all the paperwork on the way, and let divestment go on so that we can encourage free entry and exit of investors. I think those are the big you know, points that has brought stability to the oil and gas sector and even growth. He has reversed the declining, you know, stuff that we're talking about, and even growth. Now, let me drive home my point with some experiential context. I have a friend, Hoi Koi. He's actually, you know, from Asia. He now works in Malaysia. And he messaged me yesterday and said, Doc, what's going on? How is Nigeria? I hear things are getting better. I say, yeah, it's good. I said, where are you? He said, I'm in Malaysia. I said, how is Malaysia? He said, not good. The production is declining. They're in energy crisis. I'm like, are you serious? When he enunciated the point, you could now put it vis-a-vis in a comparative context and appreciate what President Bola Ahmed Tinubu had done, because the world apart, the same aging crisis and declining production is happening in Indonesia, Malaysia, even in neighboring Angola. They're facing the same crisis, and we have summoned the courage. And I think more importantly, we have now looked at the importance of doing more exploration, quantifying and qualifying the new production basins and then giving them out as a bid round, so that we have more, that people can begin to understand that, oh, look, we're not just having the Niger Delta region, there are other production prospects, exploration prospects that Nigeria gets. And that's the beauty of it. Let me tell you, a lot of the production that we have been even harnessing today with productions that were explored in the 1980s, this current administration is very, very intentional about exploring other prospects so that the future generation will have more production volumes to actually boast of.
Exactly. Having said what you have just put out right now is quite instructive, because the president also hammer on domestic refining of crude oil, particularly linking it to the divestment that allow for local investors to not take the center stage. For instance, the president was saying on the independence speech this morning that we now have a local refining capacity after 40 years. I don't know what you made of that statement, that after 40 years, we are now locally refining our product, now exporting aviation fuel, including PMS outside the country. What do you make of that?
Well, I mean, it's simply talking about the successes of the Dangote refinery.
Exactly.
But, I mean, we have to thank the Dangote refinery for being very courageous. Also understand that this whole initiative was started way before we had the regulation coming to bear. So very kudos to them. The president is really talking about the fact that the policies has brought encouragement for even such gigantic projects to not only come into fruition, but to get operational and to also serve the domestic market vis-a-vis the export market, creating a balance. So I think, that's really true. It's not without challenges, I have to tell you, but because no policy comes without the fact that there must be some adjustments, some things that we need to perhaps work on over time. Again, you see some of the circulars talking about, oh, we have exceeded our quota based on the crude for the crude for Naira deal. We will now be selling in dollars, and that's talking towards the circulars from the Dangote refinery. Since some of even the labor union issues, those are some of the issues that you expect when you get into a disruptive mode, especially with the midstream and the downstream sectors that as the Dangote thrives into those sectors. But what I'm saying is that what will consolidate more of the gains of what the president is talking about is if we then have some of these issues ironed out, and even a proactive scenario-based assessment of any issue that could come up, and those are addressed, so that we have a very harmonious kind of system where we have an improvement in the various sectors, and we also have stability in the governance, on the governance level, within the oil and gas sector. I think that's really the next way to go after building on the success of these particular reforms.
Interesting. But just this morning, we had the breaking news that the NNPC and Dangote refinery have signed a 2 to 5 years deal on crude for Naira. We have been skeptical about what will happen to crude for Naira when it did end at around March this year. But right now, we have been told by NNPC there's a new deal on the table between 2 to 5 years supply to Dangote. What do you make of that new deal coming up now?
I think it's very welcome, right? But here is my honest assessment, because I do not get into issues if I'm not going to be honest about it. Now, this is my honest assessment. A few days ago, the Dangote brought a circular saying that they had even exceeded some of their supply obligations based on the crude from Naira, and they were not going to price it in Naira until further notice. And anyone that has gone into Naira, paying upfront for the fuel can come and get a refund. I felt that's what I read. Now, my thought is I would have loved us to place some back-end negotiation before any publication, right? And the reason is because of the way it presents Nigeria as a country. Now, I was opportuned, and I like giving examples, forgive me, but I was opportuned back in the days to witness a tweet that came from Elon Musk about a plan that he had in his brain. And immediately, the stocks of Tesla rose because they thought it was already a plan that was going to happen. They thought it rose just by that tweet. And then the Security Exchange Commission came in and said, hey, this will fact check this. This is not true. This is just your thoughts. It has not happened yet. And that was all clarified. But let's bring it to here. Just that circular alone, if the tides are very strong against the Naira, is enough to plummet the Naira. Just before we even have a chance to renegotiate another deal. So fantastic policy that they put now, a longer range that allows better long-term outlook on the deal and stability. But more importantly, I would encourage that to happen before circulars so that we do not inadvertently send shockwaves into the Nigerian system that will affect you and I. That's all I'm begging for. Because some of those things, I mean, sometimes we have, and I'm not sure that Dangote understands how strong a giant they are in this. They are basically lifting one leg and even tilt the entire liver, and the economy will be in crisis. So we need to handle the place of power and influence with some level of care. Otherwise, it could really hurt the average person. Thankfully, they are going back to the tables and they've agreed on something. Hopefully, that gets operationalized. But just as a plea, a lot of the government should start putting interface managers across all of these firms that really have a strong effect on the Nigerian economy, so that it is only when things get out of hand that it should warrant some sort of public release that could be disruptive. Otherwise, it should be handled back end so that everyone keeps going in a harmonious manner.
Very interesting and quite instructive from you, Dr. Engineer Wisdom Enang. Thank you so much for coming on the show. But before I let you go, in the next 5 years, when Nigeria will be celebrating 70 years of independence, where do you think we are going to be from this achievement we have achieved in 65 years? But by 70 years, what is your thinking around our economic achievement?
All right, thank you very much. I think by 70 years, we would have had better stability. By way of that, I mean, this current administration is trying to plug a lot of leakages that happened. They're also trying to increase the efficiency of, money connections from taxation. So it means that we'll have more money in the government coffers in circulation for spend. I see a lot of intentions to expand on the various productions that we have. That's a fantastic one. So I think ultimately we'll be in a very strong position to perhaps fund our own diversification, because a lot of diversification efforts have been, for lack of a better word, kind of halted in the past because of funding concerns. So as we begin to build a robust financial outlook for the country, we should also think about improving our funding, and more importantly, because without security, whatever you fund is not going to make any sense. I mean, we talk about people being robbed and killed in their houses, so we need to ensure security of life and properties and make sure that people feel safe to live, operate, and even build the Nigerian economy. And together, we can build the Nigeria that we all desire for.
Exactly. Thank you so much, Dr. Engineer Wisdom Enang, for coming on the show today. Happy 65th Independent anniversary to you and your family over there in Lagos. Thank you, sir.
Thank you very much. God bless you. Thank you.
I've been speaking with Dr. Engineer Wisdom Enang. Our second discussion will also still follow suit shortly as we begin to extract the gains and the prospect of Nigerian economy. Join me right now via a virtual experience also is a lawyer and an economic analyst, Majid Kadri, will be joining me shortly so that we can also extract that point of Nigeria economic achievement in the last 65 years and where we'll be in next 5 years, 10 years, and thereafter. But let's